Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor, and today I am honored to have a new guest, Mr. Munro from Bannerman Energy. Bannerman Energy is a company that develops assets in Africa. Brandon, welcome to my show.
Thanks, Lucian. It's great to be on for the first time.
I would like to start with your background. Can you tell my audience, who is Brandon Munro? How did you get involved in uranium business?
Well, going right back, by education, I'm qualified as an economist, a quantitative economist, but I spent most of my early career as a lawyer. So worked in corporate mergers and acquisitions, equity capital markets law here in Perth, Western Australia. Now, it's the mining and energy sector that makes Western Australia go round. So as a lawyer, even though I wasn't doing tenement law and the detailed mining-related law, as a corporate lawyer, you inevitably acted for a majority of mining-related clients. And so I was fortunate to be able to get an understanding of the sector generally. And I was working as an M&A lawyer during the last uranium spike in 2006, 2007, including being on the team that did the defense of Summit Resources, which was a spectacular success for Summit shareholders in their defense against Paladin, ultimately going through at more than $1.2 billion. Which was a real sign of volatility. And in many respects, that was my first introduction to uranium. I left the private practice law and worked for a conglomerate, including in renewable energy, for a number of years. And in that work, I was able to work on some very large renewable energy bids. One of them in the UK was the first of its kind, going back to 2005. And during that time, it was my first exposure to the virtues of the nuclear industry, because we don't get taught in Australia that the nuclear industry has virtues, but of course that is just a fallacy. But I also experienced at a very early stage some of the limitations of intermittent renewables, both their benefits, but also their detractions and their limitations. And so it became a fairly natural choice for me a few years later, when I was given the opportunity and the choice as to what I wanted to do with the next phase of my career, to go into the nuclear sector. Now, in Australia, and with a mining related background, the end of the nuclear sector that you can participate in is, of course, uranium. And in 2009, that took me to Namibia with Bannerman Energy. I had a fabulous experience with my wife, where we lived and with our young children in Namibia for almost 6 years. Those were the days when my first job for the company was obtaining the environmental clearances for our Etango project, as well as handling all of the in-country government relations, community relations, and so on. And then, of course, Fukushima happened. And that had a very decisive negative effect on the sector. And as a result of that, very soon after that, I left the sector. I stayed involved with the Namibian Uranium Association, but I established in Namibia an exploration company that we ultimately joint ventured with First Quantum Minerals and then sold in 2015. So I came back to Perth, and I was contemplating what to do next and how to make meaning in my life once again. And that's when the opportunity to come back to Bannerman in Perth as CEO occurred in early 2016, and I haven't looked back.
Nice journey. Brandon, let's touch on uranium market on the macro side. Where are we? What's the current status of uranium market? Are we in a calm before storm, or just in a regular doing business in uranium? What do you think?
I think you could describe it in both ways, Lucian. So fundamentally, I mentioned Fukushima, which was 2011, and that put this sector into a 10-year bear market. Now, we're about 2 years out of that bear market. So we're in the early stages of a bull market that I would expect to also go for 10 or even more years. The reason why the uranium sector operates on a much slower and longer commodity cycle is because our customers operate devices, nuclear plants, that have a 40 to 80 year operating life, and their buying cycle, their purchasing cycle, is typically anything between 7 and 10 years and even longer.
Yeah.
So it's a longer cycle than you have in copper or gold or base metals. So I would say we're about 2 years into at least a 10-year bull market. So that says two things to investors. First of all, you shouldn't be investing for immediate fireworks. I don't think 2005, 2006, 2007 is the analog this time. I think the analog, you need to go back to the 70s, really the birth of large-scale deployment of civilian and commercial nuclear power operations. That's the analog. That's what we should look forward to. And to use that as an analog for what that could mean today, for 6 or 7 years, the uranium price traded in today's real terms well above $100 a pound. For some of those years, above $160, $170 a pound. So it shows that whilst it looks pretty attractive year on year, particularly if we go back to the depths of the bear market following Fukushima, I do believe that there's a lot of growth still to come, and I certainly believe that there's a lot of opportunity for investors yet to come as this bull market unfolds over the next 8 and possibly longer, 8 years and longer.
Okay. What about uranium equities? What do you see as the next heavy lifting for them?
Uranium equities are a fabulous sector, but a tiny, tiny sector. Yeah. And the reason I emphasize that is because as a sector, as a group of equities that amount to less than $20 billion, we can't swim against the broader equities tide.
Yeah.
And the broader equities tide for, certainly all this calendar year has been choppy and generally speaking negative. If you look at the S&P 500 and take the tech sector out, it's been demonstrably negative since late last year. So what that means is that we can't defy the gravity of the broader market in general. However, there are particular catalysts baked into this sector where, as long as there's a degree of broader market stability, as we've more or less had over the last month or so, uranium can outperform and outshine pretty much any other sector you can name under those catalyst conditions.
Agreed.
The most predictable or most calculable catalyst is presented in the form of the ETFs, and in particular, the physical uranium funds headed by the Sprott Physical Uranium Trust. Now, the reason why they're quite predictable is over the last few years, this sector has enabled the capital infrastructure to be able to absorb fairly large volumes of incoming capital through, say, Sput or through the different ETFs, and deploy that capital into a very small sector, be that a very small number of listed equity options, such as Bannerman Energy, for example, or into a relatively illiquid spot market for the underlying commodity uranium. So the catalyst that's most foreseeable is at some point in the near future, we will see sentiment return to this sector, not only from the true believers, the people who already understand the thesis, but from the numerous investors and generalist investors who understand the thesis, but they're waiting for the right entry point. No new investor wants to come into a sector during periods of negative momentum. So it's amazing how many analysts are out there asking me questions or doing their research in other ways, not because they're about to come on the screen next week, but because they're positioning themselves for when they anticipate that shift in momentum becomes positive. And again, because of the ETFs and because of the physical funds that we have, that will be, I anticipate, a fairly rapid deployment of capital into a very small select number of names. And that in itself will be a significant catalyst for both the uranium spot price and also uranium equities. Now, we could have market-related catalysts come along as well. We could have fundamental catalysts. Their primary purpose, as I see it, will be to stimulate the capital structural elements that I've just described.
Good point. You touched on Sput. How about Zuri Invest? Do you see both of them still purchasing large amounts of uranium on the market?
Yeah, over time, I think, without singling out Zuri Invest specifically, they're obviously the newest entrant, so the most topical, and they've done very well. It just shows how strong the thesis is to think that they were able to put away $100 million of essentially private capital through their accredited market certificate in a very difficult time. We only need to go back a couple of months and think about all of the speculation over Silicon Valley Bank and which would be the next financial failure. The fact that they put that money away shows the strength of both their team and the advisors that they've got in Curzon Trading, as well as the uranium thesis itself. Now, I don't think they'll be the last physical fund, and between Zuri Invest, between the Kazakh ANU Energy, between Yellowcake, which was the first of these funds outside of the US, and of course Sput, we'll see more funds, we'll see more deployment in different markets and also appealing to different types of investors. That's the importance of the accredited market certificate. There's a pocket or a group of investors in Switzerland who find that to be a far more attractive instrument with which they can invest than buying Sput through the Canadian exchange or the OTC markets or one of the ETFs. So we will see broadening opportunities for different types of investors. And I do think that their cumulative effect over the coming years will be quite pronounced.
Okay, one final question about the macro long-term contracts. Do you see them speeding up in the remainder of the year or in the next 12 months?
Yes, I do. Now, the reason is that the utilities are focused on long-term contracting, but not uranium. They're very focused on long-term contracting for enrichment and conversion. And there's a bit of a dance going on at the moment, and we've seen the first signs of that with the decision by Urenco now to increase the capacity in their US operations. Only about 15% of their US operations, an increase, but they've been very careful in their public relations to make it clear that this has come about because of contracting support from their customers. And that is what will bring on additional capacity in the West. Now, that's capacity of in the hundreds of thousands of SWU, when the West in total needs between 5 and 10 million SWU to be able to correctly and sufficiently insulate itself from the reduction or inavailability of Russian SWU over the coming years. So it gives you a feel for how much more contracting is yet to be required and why the utilities are so focused on that. The same can be said for conversion. Once the utilities have all of their contracts in place or sufficient contracts in place at that critical time proximate end of the nuclear fuel market, that's when they then turn to uranium. So there has been contracting, there's been significant volumes of contracting, but I do believe that there's a lot more to come once the utilities are able to start focusing more on uranium, either because they have the other end of their business sorted out, or because there's a reason why they need to act. And that reason could very likely be increasing spot prices caused by, for instance, Sput being recapitalized. So you can see how the financial players now are starting to become very integrated in the fundamental operations of the business, and they operate together. They can operate as a flywheel. Increased contracting of uranium will increase investor interest, and so we go.
Yeah. Let's move to Etango Project, your project in Namibia. Can you give us an overview of the project and some news about it? Any news?
So we're in Namibia, which is a preferred uranium development jurisdiction. In my book, it's the best place to be if you're developing a new uranium asset in the world. Yeah. It's a very large asset. It's been around for a long time. We've been working on it since we discovered it all the way back in 2006. And that's indicative of general timeframes in the uranium sector. It's a very long lead item supply into the nuclear fuel cycle. We've progressed it all the way through definitive feasibility study in that time for an initial development path where we operate at a large size with the capacity to expand further. And that definitive feasibility study was released last December to envisage a 15-year initial mine life at average production of 3.5 million pounds of uranium. Now, for people who aren't too familiar with the sector, that's enough for 7 to 8 conventional gigawatt scale nuclear reactors. So it's a very significant and a very large mine. Yeah. Now, over the journey, we initially had planned a much larger version of Etango, and we did all of the drilling and the resource definition, and we had reserves of 130 million pounds to support that larger version of the mine. And that was anticipating an average of 7.2 million pounds, which is enough for 16 or 17 nuclear reactors. Now, because all of that work was done to a DFS level, we feel very confident about our ability in the future to then both extend the mine life from that initial 15 years, or alternatively, or perhaps in conjunction with that, we can expand the production as the market needs it. So it gives us a very unique scalability where we can get into production early as the market requires this material fairly quickly, and then have that optionality associated with a profit-financed expansion to a much bigger scale.
The company plans to start production in 2026. That was the initial plan.
Yeah, that was the initial plan. We've always said that we will be driven by the market, not by any self-imposed timeframes. Okay. Unfortunately, I know many mining executives who've painted themselves into a corner with investor expectations, and I'd hope that we've been very successful in positioning that we're not going to push material into a market that doesn't best suit our shareholders' interests just for the sake of the CEO ticking a box on his CV, for example. We are determined to bring Etango into production, and it's a shovel-ready project. But we will be patient until we think on our assessment of the uranium market that the long-term contracting dynamics present the right opportunity for us. And that's not yet. When we look at a spot price in the mid-50s and long-term prices at their current floors and ceilings, we think that this market still has to ripen a little bit before we can achieve the right result. That will then have a corresponding knock-on effect to when our initial production would be.
Okay. Your all-in sustaining cost on that project is below $40. Right?
Correct.
Okay, that's a good project. And your IRR is around 17%, if I remember correctly.
That's at $65 a pound. Yes. When we presented the DFS, we presented 2 pricing scenarios. The first was $65. And what I tried to explain to investors when we released it was, we chose that benchmark not because we believe that that's the potential of this sector, quite the contrary, but we chose $65 because it was consistent with the prior study work that we'd done, the scoping study, which the Canadians call a PEA, then the PFS, and we needed to ensure that the analysts could then track progress over those studies into the DFS. So because we don't see $65 as an attractive end game in this sector, we also published an $80 price. And that then puts the IRR at about 25%, which we think is more appropriate and would support very good shareholder outcomes. And it also means that for example, the NPV after tax more than doubles compared with the $65 price assumption. So we think that $80 is defendable. We think that is where the sector needs to settle. And in fact, I'd go as far as saying that with recent and continuing price inflation that we're seeing across the mineral commodity sector generally, you might see that $80 incentive level inflated further.
Brandon, what about financing? Do you have that discussions going on prepared for the project financing? What's the status?
Discussions, no. Preparation, yes. So the easy one is preparation. So we've been heavily engaged in long lead items for over a year. For example, ensuring that all of our environmental work meets the latest Equator principles and the latest IFC performance standards. We've done everything to a very high level ever since I was involved back in 2009. But of course, the rules change and the expectations change and the disclosures change. And so we've spent, several months ensuring that it's a very easy box ticking exercise, whether it's for one of our customers, one of the utilities who are very ESG focused, or for financiers who need to make sure that on behalf of various stakeholders, we meet ESG, whichever ESG performance standard is required. So that's an example of something that you don't want to suddenly think of as you're in discussions with potential financiers. So the reason why we have chosen not to initiate and advance discussions with financiers is because at that moment, that's when a financier will judge a project based on current market price. And so it just doesn't make sense for us to go to financiers and say, look, here's a fantastic project. We've de-risked it so well. It's in Namibia. We've got all of this. And by the way, just ignore that $56 uranium spot price for the moment because it's going up. We'll wait until we can demonstrate to those financiers that the sector is maturing and that the tension that we anticipate is building.
Yeah, that makes sense. You touched on Namibia as a jurisdiction, and what about local communities? How is your relationship with them?
Well, it's great. That's one of the reasons why I continue to say Namibia is the preferred and peak uranium development jurisdiction in the world. To give you a bit of context, so as I say, I've lived in Namibia, I've lived in the local community. A large part of my job was interacting and getting to know everybody. Swakopmund, which is the closest town, it's a small town, it's a few tens of thousands of people. And the town was originally settled by the Germans, but only as a small village and really expanded on the back of the Rossing uranium mine, which was constructed in 1976. So much of the town's infrastructure was built by a uranium mine. The town's had 4 decades of interactions and experience with the uranium mine without any negative impacts. So the capacity for an NGO to fly in from, Netherlands or Germany and cause trouble there, the locals literally chase them out of town. They say, get out of here. You're talking nonsense. Don't come here and try and prevent us from getting jobs. And over and above that, Namibia as a country has got a very strong development agenda. And they do understand that the mining industry in particular creates highly skilled, high-paid jobs. And with Rossing uranium being there for decades, there's just the Rossing alumni and that training and that work readiness and that all of the things that go with working in a world-class Rio operation, that's now infiltrated everything from public service to business to the profession. So the alumni from a Rossing is everywhere in Namibia at the most skilled and highest levels. So community support is really strong across the country and particularly in the local community. And also government support's very strong. There's none of this political navel gazing that we have in my home country of Australia. about is it good, is it bad. It's just universally beneficial for the country as long as the project proponents, such as ourselves, do the right thing by the environment and socially. And the Namibian uranium sector's got an exceptionally good record in that respect, generally.
Okay. Are you looking for any M&As in your neighborhood, adjacent to the properties or nearby, or you are just focusing on Etango at the moment?
So in Namibia, our focus is on Etango. And remember, because we've got this inbuilt optionality associated with a capacity expansion, you could easily argue that we've actually got our own inbuilt pipeline. We've got 2 projects. Now, on the one hand, we don't have geographical diversity. We don't have one project in Australia and one project in Namibia. But that's not all bad. It's a lot easier to manage in a single country.
Yes.
But it's a very superior outcome because we've got this second project, this pipeline project being an expansion, which is in the same ore body, it's in the same mine, it's in the same employees. So all of the risk associated with developing a second project is dramatically decreased, and it's really simply a case of financing and economics. Even the ore body's been drilled out so well because we did that associated with the DFS, with the very large project. So for that reason, we don't feel under any duress to build a pipeline or to consolidate or to acquire. We're in a position to do that in a highly opportunistic way. And ultimately, this sector will go through consolidation. I saw that, as we talked about, with my own eyes in 2005, 6, 7. And we will see a lot of that undertaken. And of course, we'd like to be in a position to lead that when we're ready.
Okay, Brandon, let's discuss share structure and skin in the game. Can you tell us some more details about your share structure and what is the current number of shares outstanding, and if you know the number of warrants and options?
So we have about 150 million shares outstanding. The number of options is very insignificant. And in Australia, we don't have a separate class of warrants. So the only options are associated with employee and board incentives. So they form two classes. There's options, which operate like warrants in Canada. There's a strike price and a time frame. And then there's also employee incentive plan rights. Now, all of the employee incentive plan rights attach to personal KPIs and, of course, tenure. So employees have to work for a further 2 or 3 years, depending on how senior they are. And in total, we're looking at about 4.5 million combined options and employee incentive schemes. So there's very, very little overhang from an investor perspective. Now, in terms of skin in the game, we've been long believers at Bannerman Energy that employees need to feel a part of the purpose of the company. And so we've had an employee incentive plan that goes all the way back to 2010. For my part, both through buying shares on market and also accumulating a portion of my salary through employee incentives, between the two of them, I've got securities equivalent to about 2.5% of the company. Now, given we're we've traded as much as $500 million over the last several years as a market cap. For me and my family, that's life-changing. That's very, very significant. So I've got all of the skin in the game to want to make this a success, and I can assure you of that.
Okay. What about your cash balance at this moment? How much cash is in the bank, and for how long is this amount going to last?
Well, we've got approximately 45 million Australian dollars. So that's a very well capitalized balance sheet for what we need to do. Until we start with construction, until we've achieved a financing and we are ready for construction, we're only consuming a small proportion of that. Now, what that does for us strategically is very important. As per my earlier comment that we want to be strategically patient so that we proceed with this project when the market needs the pounds, not when we run out of time. We've ensured that this large cash balance gives us full optionality. We can continue moving the project forward. So at the moment, we're engaged in front-end engineering and design, an engineering process that's normally done with debt financing, but we can do that with equity because of this large cash balance. We can order long lead items. We've got a mining license application in process at the moment. So once that mining license is granted, we're in a position to start building the project and do some of those long lead items like access roads and so forth. So that can be done from the cash balance, which means the commitments that we make that ultimately define shareholder value, that's whether that's commitments to selling our product, commitments to financing or other structural capital commitments, they can be done at a time of our choosing. We're not going to be pushed into or rushed into any of that because we're worried about running out of cash.
Okay. Can you tell me who is behind the team of Bannerman?
It's a really good question, Lucian, and I'm sure it's a common one that investors ask you, because the uranium sector has been gutted of expertise and experience, mainly through retirement. It's been a long time coming for nuclear industry and the uranium end of it to be something that's sexy and appealing to younger people. So we're very proud and very fortunate that we've been able to accumulate a team with really good uranium experience, excellent Namibian experience, and a very good integration into the nuclear sector itself. So if I start with our Namibian experience, our in-country managing director, Werner Ewold, he was the manager of mining at the Rossing uranium mine. Mining is our single biggest expense, and it's where we absolutely need the most critical expertise, which is what Werner brings. Our chairman in country was the managing director of Rossing during its heyday when it was the largest uranium mine in the world. Our chief operating officer, whose key deliverable is building and delivering the project, constructing the project, Gavin Chamberlain, he built Husab, which is the largest open pit uranium mine in the world, which is only 25 kilometers from Etango in Namibia. So he's got absolute expertise where we need it. In terms of the nuclear sector, I'm quite involved in the sector at the strategic nuclear end. We've just hired Olga Skolyakova, who as our Vice President Market Strategy. Olga has 15 years in the nuclear sector, and not just as a, in a narrow vertical of selling uranium, but all the way across the nuclear fuel cycle from, selling enrichment services all the way through. And she came from World Nuclear Association most recently. So we've got the people who at the senior level can then build this project and integrate it into the nuclear industry. And from there, the superintendents will be able to get those people from Namibia. Although it's a very small country, it does have a vibrant mining industry with, by then there'll be 3 operating uranium mines and a big alumni of uranium mining experienced personnel.
Brendan, I want to thank you for the opportunity to ask you these questions and for taking the time to be my guest. I wish you luck with your business and, of course, in your private life. Thank you very much.
Thanks, Lucian. I really appreciate it.
Thank you.